Hello, I'm Hamish Maxwell, an investment specialist with Scottish Mortgage. Thanks for watching this portfolio update to the first quarter of 2025. I'll bring you up to speed on how we think about withstanding stormy markets, including why our time horizon can be an advantage. I'll touch on long-term growth themes in the portfolio, including the rise of autonomous technology and digitalization of global finance. I'll mention returns and some trading activity, including how short-term volatility, while painful, can create opportunity. Our purpose at Scottish Mortgage is simple: to maximise total returns over the long term. To do that, we aim to offer a liquid and low-cost portfolio of the world's most exceptional public and private growth companies. We invest for the long term, and we've been active stock pickers since 1908. So, through 2 world wars, pandemics, and some big market shocks. This chart shows our strong returns over a century, notwithstanding shorter periods of volatility. We usually avoid commenting on short-term macro noise, but President Trump's tariffs are significant, sparking a real change in global trade and greater uncertainty. No one knows how things will unfold, and we are not speculating. When markets fall, we don't panic. Instead, we stay calm and carefully assess our portfolio and the world around us. Scottish Mortgage has characteristics that we think can help to withstand stormy markets. These include longevity, stability, and flexibility. Only 1 in 10,000 companies survives to be 100 years old. With 116 years of experience, Scottish Mortgage and its manager, Baillie Gifford, are among a small cohort of companies to surpass a century in age, reflecting an ability to navigate challenging times. Stability comes from the deep roots of our culture, of long-termism, of prioritising shareholders, and of being guided by an independent board and experienced investment managers. It also comes from confidence that over the long term, earnings drive share price. Flexibility in a changing world comes from our investments in companies led by technical leaders and founders with adaptive strategies, resilient financials, and innovation-fueled growth, as we'll examine. There remains a clear contrast between market short-term preoccupations and valuable long-term growth trends. On the one hand, the market's attention span, which typically operates in short cycles. Last year, it was elections and inflation. Now it's tariffs and trade war. Beyond that, the question mark. Short-term worries are inherently unpredictable. On the other hand, a more compelling story: long-term structural growth trends, such as the enablers of artificial intelligence. Our holdings NVIDIA, TSMC, and ASML continue building AI infrastructure. Digitalization of the economy continues with e-commerce champions like Latin America's Mercado Libre and Asia's Meituan and Sea Limited. Global finance is being transformed, such as by our holdings Nubank, Stripe, and Revolut. And an evolution in transportation is underway, including electric vehicles by BYD, autonomous trucking by Aurora, and air taxis by Joby. Let's look at a couple of our long-term growth themes. The rise of autonomous technology. It represents one of the most transformative growth themes in the world. We're at an inflection point where autonomous systems have the potential to save and improve lives, such as with ground transportation, logistics, and aviation. Companies like BYD and Nuro are creating advanced autonomous driving, while NVIDIA and Horizon Robotics provide technology to support the advance. Zipline's autonomous drone delivery and Aurora's autonomous trucks are redefining logistics. Joby Aviation is pioneering electric air taxis with a view to autonomous, and what a great potential that is for urban mobility. The digitalization of finance is another of the world's most transformative trends. We have exciting investments, including Stripe and Affirm in North America, Nubank and Mercado Libre in Latin America, Adyen, Revolut and Wise in Europe, and Ant Financial and C Group in Asia. These companies are revolutionizing banking and commerce, including trillions of dollars in payments and improved financial inclusion for billions of underbanked people. The rapid growth of the so-called GDP of the internet further underscores this important trend. If you want to beat the market, you need different views to the market. Our high active share shows we are different. And while we are more concentrated than the market, it's in a different way. Our top 10 is 45% of the portfolio, and it does include US tech giants, Amazon and Meta. But there is a world of opportunities. From emerging markets, we have exciting e-commerce platforms Mercado Libre, Pinduoduo and Meituan. From Europe, we have exotic sports cars from Ferrari and audio streaming from Spotify, which we've owned since it was private. We can have up to 30% in private companies, which is a real differentiator. Our largest holding is the private company SpaceX, which is making amazing progress in space logistics and satellite internet connectivity. And given its main customers are government and large telecoms, and there's no proper rival to its Starlink satellites, SpaceX is arguably less susceptible to brand pressure than Tesla. From China, we have ByteDance, another of the world's largest private companies and owner of TikTok. ByteDance is changing how digital content is produced and consumed. Our private allocation was 28% at the end of March. Our valuations are updated at least once a quarter, and they have been updated again after some of the recent volatility. A word on performance. We don't usually comment on short periods, but we did recently enter a sharp period of volatility. In response to US tariffs, trillions of dollars fell from global markets. Beginning in the Americas, this spread around the world. Scottish Mortgage has not been immune. In Q1, Scottish Mortgage experienced volatility in line with its benchmark. This could remain for a time. However, meaningful progress takes place over 5 to 10 years or more. It's pleasing that our long-term returns have been so strong. Our last 10 years of cumulative portfolio returns was 320% to the benchmark's 100%. Such as Nvidia, Ferrari, ASML, and Amazon. Progress continued in 2024 when our portfolio grew 24% to the benchmark's 20%. Positive contributors last year included Nvidia, Spotify, and Meituan, all making excellent progress. There's also been our share buyback, announced in March 2024 of at least £1 billion, which remains ongoing. This had been helping to narrow a greater than usual discount, though the discount is currently volatile along with the broader market. The board believes that it's in the long-term interests of shareholders to manage discount and premium volatility over time. The recent market sell-off has been sudden and indiscriminate. Global companies will be seeking to optimize their supply chains. We're interested in where the stock market is getting it wrong. For example, in electric vehicles, if BYD is subject to tariffs on China, it could still, one day, sell 10 million cars or more a year outside the US, including autonomous and rapid charge technology. And while large software companies may be immune from certain tariffs, second-order effects could be felt on things like advertising. Unlike much of the market, we think it's important to carefully analyze these things. On trading activity, we expect turnover to remain low. However, volatility, though painful, can provide opportunities. We recently bought Revolut, the revolutionary British digital bank that offers a range of streamlined services at low cost. We made follow-up investments, including BYD, which has become the world's leading electric vehicle company, and Coupang, the impressive Korean e-commerce platform. We funded these by some reductions. From Tesla, we took over £700 million, and Nvidia, £1 billion over the last 12 months, taking them to much smaller sizes in the portfolio. We also reduced healthcare pioneer Tempus AI, data analytics company Cloudflare, and Mercado Libre, as share price growth allowed capital use elsewhere. We think the portfolio is well positioned for long-term growth, and encouragingly, it displays characteristics that can help to withstand difficult markets. Our holdings have greater capitalization on average than the market. They have lower debt levels than the market. They are reinvesting more in growth than the market, and their earnings and sales growth has been stronger than the market, which is the main driver of share price over the long term. We're interested in growth that is exceptional, resilient, and adaptive. In summary, at Scottish Mortgage, we aim to offer something distinctive, a liquid and low-cost portfolio of the world's most exceptional public and private growth companies. We are committed to navigating challenging markets with a focus on long-term opportunities. By investing in exceptional growth, companies that are driving transformation, like autonomous technology and financial digitalization, we aim to create exceptional long-term value for our shareholders. Thanks for your time.